Welcome to the AIRBNB multi-acquisition model. Here's where you can compare 20 Airbnbs simultaneously, propositions. And if you have an existing portfolio, you can also add it on here and compare that with one another and compare it against the portfolio at large. Let's go straight to the index of the model. You will see we have an input sheet, a ranking system, portfolio system, and a dashboard. And then each Airbnb proposition has its own financial analysis for 20 years, 3 statement analysis, as well as valuations. So if we go to the input sheet, you will see the number of models on the left-hand side running down and your simple inputs to make the model coherent. We start off with the purchase acquisition data, which is acquisition price, acquisition fees, the capex for furniture equipment, the expected lifespan, and then we get into the financial data, which is the loan amount which you expect to take advantage of with the bankers, the rate, the length of term, etc., and then your income tax rate and capital gains tax rate. This is a projection in case you exit the investment, and it is also necessary for us to calculate internal rate of return after capital gains tax provisions have taken place. And the cost of the owner's loan account, as we know, no funds are free. The difference between the acquisition fees and price and capex amount to the external loan amount will automatically accrue to the owner's loan account. Then we step aside and you'll see all your standard monthly expenditures, rates and taxes, levies, maintenance, etc. That's pretty much standard across the board. We have annual escalations, the annual escalation, cost escalations, income escalations, the expected growth in value per annum. And after that, all we have to input is the occupancy days per month, as well as the income that we expect per day in each of these particular months. As you know, various times of the year, rates will change, so you will enter month by month the rates. At this point, you've done all the inputs. As I say, you can input as many as you like up until 20, and the model is easily expandable as well. So once we have inputted these fields, you can go either back to the index, and from here we can go view Airbnb1. Now, each proposition will have the exact same data, valuations, etc. On the left-hand side, for your convenience, you'll see this is the data that you have captured in your input sheet. You've got your net present values on 5, 10, 15, 20 years, internal rate of return, modified internal rate of return, earnings before interest and tax, your loan to value ratio, you can see how that declines over the time period, and your net profit after tax percentage, and a bit of a visual graphs. Now, each Airbnb will have 20 years of cash flow statements, annual cash flow statements. You'll scroll down, you'll see your various income statements for 20 years. Your taxation has been included. Everything is easily understandable. In your detailed balance sheets, here you will notice we have a revaluation reserve account. That's as your AIRBNB escalates in value. We also have a revaluation reserve account for capital gains tax. So if you exit, one has to consider the capital gains tax liability which you will face, and we've got this throughout the model. You will see income tax credits are displayed here in case you're running a tax loss, which in this instance you're running a loss in the first few years. And right at the bottom we will have a tax computation that is in case sometimes you lose your trail of thought and you wonder why, for example, in year 2 you're running a slight profit but there's no tax payable. That is, of course, because your tax losses accrue over the time period, and you can easily follow them if you scroll down to the tax computation sheet. Now, every model has the same basis, so it's easy to compare. From here, we go to a ranking system. So if you have a number of propositions that you are evaluating, or if you have a number of positions that you are currently running, you can easily compare them to one another in terms of ranking at a 10-year period, the internal rate of return, modified net present value, and net profit after tax percentage. So it will give them a ranking, and you can easily visually view these and see which propositions are best for you to purchase, or alternatively you might want to get rid of 1 or 2 positions that you are currently in. You can go to the dashboard, which again is a nice visual. You can quickly see those that are outperforming and those that are underperforming. You can compare them against one another in one standard portfolio, and you can scroll down and have a look at them individually as well. Then we get to the portfolio. As you can see, we've got a weighted average portfolio in terms of internal rate of return and all the key metrics that need to be there. And again, we measure the internal rate of return after capital gains tax versus the portfolio average. So it's very easy to see which of the propositions or current opportunities that you have need to be addressed or rebalanced, etc. So what we are saying is this particular model for AIRBNBs is extremely coherent, simple, and easy to follow. There are no tricky formulas. We use standard formulas in Excel, easy to follow, and we really hope you have enjoyed watching the video of another coherent financial model which we have produced.